Success in Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And we are back on the Financial Survival Network, and we just got a lot of happy talk from Janet Yellen in her testimony before Congress. But here's somebody who never agrees with what she has to say. Yep, we got Peter Schiff back on the show. Peter, welcome.
Hey, Jerry. Thanks for having me on the show.
Hey, so what do you think? Anything new from the Federal Reserve, or is it just more of the same?
Nope, it's more of the same. It's basically denial of the problems, cheerleading, mindless, rah-rah about the economy. And, Janet Yellen basically demonstrating her complete ignorance when it comes to economics, completely brainwashed by the Keynesians, thinks that, the economy is improving and that she's going to be able to keep interest rates low until the economy is so strong that a increase in interest rates will be a welcome relief because the economy will be so hot that we'll need to restrain it before inflation bursts out because, A, she still believes that inflation comes from economic growth when it doesn't. It comes from her money printing. And she also believes that the recovery that the U.S. economy has experienced is actually real. She doesn't understand that it's predicated on the asset bubbles, which need 0% interest rates to maintain their size. That if the Fed raises interest rates at all, the bubbles will pop. In fact, just talking about raising rates, and the air is already coming out. And look what's happening in the market. We're forming now a head and shoulders top in the NASDAQ. We're very close to finishing the formation, and it's a long way down.
Yeah, I don't know if you caught that article about Einhorn, who was at a dinner with Ben Bernanke, but he said, isn't the stimulus like having the 35th jelly donut, and eventually you get to that 35th donut and it really doesn't taste good and you just don't want to eat anymore? Mm-hmm. And aren't we there already?
We're close. We've certainly had a lot of jelly donuts. At least some of us have, But meanwhile, the price of donuts and jelly are going way up. But the Fed doesn't want to acknowledge that. Prices for food are really accelerating. Energy costs, utility costs, those prices are rising, even if stock and real estate prices have now begun to decline. And meanwhile, the U.S. economy actually, contracted. Even by the government's estimates now, we're going to get a negative print for the first quarter GDP. They originally reported it as a positive 0.1. But they're going to revise that in the negative territory, which means as they're talking about this, fantastic recovery, we're halfway to a recession already.
Yeah, you get what's called what the Dower science calls diminishing marginal returns or diminishing marginal utility, and eventually, really, it just does more harm than good. And we're kind of at that, or we've been there for quite a while, and each dollar of debt really does harm to the economy, right?
Well, especially when the money isn't even borrowed to invest in plant and equipment and make us more productive. It's all being borrowed to consume, to finance consumption or government spending, which is consumption, or to finance gambling on Wall Street. I mean, we're not productively putting that money to work. So we're not going to generate real income to pay off the debt. We're just going to have to inflate it away. So the problems are just getting bigger. They're not getting smaller, and everybody seems to be oblivious. And the amazing thing is people forget that no one at the Federal Reserve has ever seen a crisis in advance. They never see an economic downturn before it happens. They never forecast a recession prior to the beginning of the recession. So to expect any kind of clarity or honesty or any particular expertise from the Fed when it comes to making forecasts defies all historical precedent.
Yeah, that's right. And in fact, not just the Fed, but all of the pundits that you see on CNBC, besides you and a few others, none of them ever see the next disaster coming, do they?
No, that's why you don't see me on that often. They try to keep me under wraps.
Yeah.
I only come out every once in a while, but the vast majority of people who are there all the time, yeah, they're perma bulls, everything is great, and that's really what they want the public to hear.
Yeah, you and guys like Howard Davidowitz, they keep you under wraps now and only brought out on special occasions. Have you been surprised what's happening lately with real estate? Retailing rather.
No, I've been expecting. And it's going to continue. We're getting all kinds of news. It's going to just continue because Americans are broke. How can we borrow more money and shop? We're already suffering from all the things that we bought in the past that we shouldn't have bought because we couldn't have afforded it. Now we've got all this debt. We don't have any jobs. Think about, the jobs numbers we got last week. You get close to 1 million people that leave the labor market. These are people that are never going to work again, most likely. So they're not going to spend as much money. They're not going to need to spend because they're not going to work anymore. But they're going to have less income. When you're just living off of welfare and food stamps and disability, you don't have as much purchasing power as when you have an actual job. And more Americans are loaded up with debt. We're still paying for the things that we bought 10 years ago or 5 years ago. We don't have any more money to buy new stuff. So I think you're going to see a huge collapse in retailing. I think you're going to see lots of closures of stores across the country, shopping centers, malls, strip malls. You're going to have massive unwinding of this bubble in retailing because we've built too many stores. The problem is all those stores are selling merchandise that was imported. We can't afford to import it. So this whole retail culture, this consumer-based economy is imploding before our eyes, and the Fed, is too blind to even understand it.
Peter, so many times people say to me and to you, and I'm sure others in our group, you guys are just stopped clocks. You're just like stop clocks. You're saying the same thing over and over again. So you're right, once every decade. What do you say to those people?
Oh, no, I'm saying the same thing over and over again, and I've been continuously right. I don't know where I've been wrong. Because the problem hasn't been fixed. I identified the problem a long time ago, and since the problems are still there, since they're bigger than ever, I'm going to continue to point them out. So it doesn't make me a stop clock because, I'm criticizing the budget deficits. Well, they're still there. The national debt, it's bigger. The trade deficit, the lack of savings, the monetary policy. All the things that we've been doing wrong, we're still doing them. Mm-hmm. But, the people who have been Pollyannic and been cheerleaders for the government and the Fed, they're the ones that have explaining to do. The economy is a disaster. Okay? The labor force is collapsing. Real incomes are falling. Our standard of living is going down. Things are not getting better. They're getting worse. And the only reason that we haven't had a complete implosion is because a lot of people don't realize how bad the problem is, and we're still getting a lot of support from the rest of the world that is loaning us all this money. And so until they figure out how dire the circumstances are, we can continue to muddle along. But the whole time, the problems get bigger and bigger. And you can't say, well, gee, we haven't had a complete implosion. It hasn't been Armageddon. It hasn't been hyperinflation. Therefore, Peter Schiff is wrong. That doesn't mean I'm wrong. It means that there's maybe still some time to do something to mitigate the damage. But eventually, we're going to have this complete collapse. And it's not because I'm a stop clock and say, well, yeah, he's been talking about a collapse for 10 or 15 years. So now that the economy's finally collapsed, well, he's a stop clock. No, I don't know. I don't know when it's going to happen. But the fact that it even does collapse, what about the people who said everything was great? Why aren't they stop clocks? Because in the end, they're wrong.
So you mean it's not a buying opportunity on Wall Street because it pulled back a little, huh?
Well, I think that if the markets continue to fall, which they probably will, Fed is going to have to come out and reverse course. The Fed is going to have to admit that their forecast was wrong. They'll blame it on something, and they're going to have to come back with even more QE, which will make the markets go back up. But it's not going to help the economy. It'll help worsen the economy. It will continue the downward trend that we've been in.
Yeah, and you have to wonder if we didn't have an energy boom going on in the country, it all would have sunk that much faster,
Well, that has been a net positive. Could you say, well, if we hadn't had it at all, would we have already had the collapse? There's no way to know. But certainly the fact that we have been able to produce and export some energy and that we haven't had to import as much, you got oil prices right now at over $100 a barrel. Imagine how much higher they would be if we hadn't been able to have the fracking revolution here in the United States. Imagine where oil prices would be. They'd probably be $200 a barrel.
And then we'd really be up the creek without a paddle, huh? Literally, people would be freezing in their homes, and the whole thing would have been, and there'd be hundreds of thousands of people without jobs, even more. And
more job losses are coming, unfortunately. I mean, we're still early in the process. I think this labor force is going to continue to disappear right before our eyes.
And it just...
But I also think the unemployment rate eventually is going to reverse and start to tick back up, because I think a lot of the companies have believed the hype. We've been talking so much about a recovery. A lot of businesses actually expect one. They actually believe it's coming, even though they really can't see any signs of it. So many experts are saying it's happening that I think some businesses have been reluctant to lay people off, or maybe have even hired people on anticipation of a recovery that's just not going to happen. And so when they have to throw in the towel and let go a lot of these people, you're going to see an uptick in the unemployment rate too.
Yeah, and when we come back, we're going to talk more about that coming uptick in the unemployment rate on the Financial Survival Network.
FSN Radio.
When your accountant wants tax-free income, this is what he does. Accountants know the law. They also know that any American could legally get paid up to 3 times per month, 100% tax-free. That's 36 tax-free checks each year. It doesn't matter what you make already. This simple strategy could work for anyone. Go to www.irsrevenge2.com to learn how. That's irsrevenge2.com.
FSN Radio.
Do you have Medicare or health insurance through your employer? If so, listen up. The healthcare reform wasn't written to save the healthcare industry or even to lower healthcare costs. Shoot, it isn't even designed to insure the uninsured. It's just a temporary political byproduct. Like a flat rock you step on in a swiftly moving stream, Obamacare is just a means to an end. Want to learn more about Obama's ultimate objective? Then you'll want to review our latest research presentation found on oclies.com. In it, a health expert and industry insider explains what you think you know about caring for your health is about to drastically change in 2014. Plus, he details the simple steps you could take to save thousands of dollars per year in health costs. It's free for you to preview at oclies.com. Don't waste time. What you don't know about the healthcare reform could hurt you and your family.
The Financial Survival Network. It's all about what's next.
And we are back on the Financial Survival Network with Peter Schiff. So how high can the unemployment rate go, Peter? I mean, realistically, it's in the 20s now, regardless what they tell us. Can it go up to 30, 40%? Is that possible?
Sure can. I mean, there's other countries. I mean, if the policies are stupid enough, think about some of these proposals for minimum wage hikes. I mean, some of them are way up there. And, of course, the higher they make the minimum wage, the more people they throw out of work. But, the only reason that the unemployment rate has come down it's not due to the unemployed getting jobs. It's because the unemployed are no longer looking for jobs because they have exited the labor force. So that is not the good way to get your unemployment rate down. And it's not that the people who are left the labor force are leaving because they're so rich they don't have to work anymore. It's because they're just living off the government and they've decided that, work doesn't pay, that it's better to just live on the dole. And in fact, in the jobs numbers we got last week, the government claimed 288,000 jobs were created, even though 80% of them were just made up because of the birth-death assumptions. So who knows how many jobs were actually created? Maybe we lost jobs in April. But even the government admits that of the 288,000 jobs that were created, on balance, people who were under the age of 55 lost jobs. So the job gains were concentrated among older people, 55 and older. And I think a lot of those people are 65 and older. Now, why are all these old guys getting jobs? Well, the answer is because they can no longer afford to stay retired, because their income is inadequate with 0% interest rates. Meanwhile, the cost of living is going up based on the inflation that the government denies exists. So a lot of people are coming out of retirement and taking jobs that they prefer not to even have. That's the recovery that we have. Meanwhile, young people that should be getting jobs aren't.
Yeah, it's a pretty dire situation out there for many. And then you have this boom in people going on disability. And just like you said, basically it's just another form of welfare program.
Yeah, it's very easy to file a false disability claim, and the disability rolls are skyrocketing. And as more phony claims come in, people tell their friends, hey, this is great. Here's how you just get a free vacation. You just pretend you're disabled. I mean, it's easy to do. And more people are doing it. And, it's not that we suddenly had a breakout of disabilities. It's the job market that's disabled, and people are just taking advantage of government programs, which is what people always do with government programs, which is why we shouldn't have these programs, because everybody takes advantage of them. It's a moral hazard.
Yeah, and in fact, that's why they're created in the first place, right?
Well, who knows why they're created? Sometimes, they have good intentions, but a lot of times they don't. A lot of times there's actually evil intentions behind these programs. But the net effect is always to undermine the standard of living of the country, because it really screws up the incentives. They punish people for working, and they reward people for not working. And as a result, we have fewer people being productive and more people, living off the dole.
Yeah, it amazes me that people in the coasts, especially in the New York metropolitan area, really can't see the harm that's been done to the inner parts of the country, to the Midwest and, just to other areas, how bad the economy is. They're really living in this bubble where they don't see reality.
Nope. When you're in the bubble, it's very difficult to appreciate exactly where you are. But once it bursts, and you got all this soap in your eyes, right? I guess maybe it's easier to see. But certainly the people who are the least likely to identify a bubble are people at the Federal Reserve. Somehow everybody looks to them and asks, Janet Yellen, do you see a bubble? And they wait for the answer, like they're waiting for,
the Swami
to come down from, Mount Sinai and present the tablets of the answer. And if they say, no, I don't see a bubble, they say, phew, I'm relieved. I was worried that there might be a bubble, but since the Fed told me not to worry, that there's no bubble, well, I guess I shouldn't worry. But that's what they say at every bubble. They never say it's a bubble. They always say it's not.
Yeah, well,
there's no history where the Fed said, yep, we got a bubble. And then, it's like, nope, they deny it. And then after the fact, they'll talk about it, but they'll never talk about it before it pops.
It's just remarkable, because I was up in the New York area, and every restaurant, it seems, is packed, and the real estate market is completely out of control. I mean, an apartment that a co-op I might have lived in 20 some odd years ago, back in the 80s, is probably worth 5 times more than when I lived there. And I still don't want to live there. I didn't want to live there then. I don't want to live there now. I managed to get out of the socialist stronghold of the Northeast. I'm happy not to live there, but I'm thinking, man, it was a small apartment when I lived there with my 2 kids and my wife.
Well,
and
still small.
Yeah, it hasn't gotten any bigger, but the price tag is 5 times what I paid for it. It's just incredible. That's what happens in a bubble.
That's inflation for you. Inflation in a bubble, yeah.
And they think that that's normal, that's what the market's behaving normally. They don't understand it. Hey, and I just want to turn your attention to one more area of Manhattan, the World Trade Center redevelopment project. When the final price tag is in, it's going to be upwards of $20 billion, and they're still going to have empty skyscrapers. Now, this is just an act of insanity. I'm writing an article about it now, and it's a case of malinvestment. And you've got a PATH train station that's going to cost at least $4 billion to build. You've got the tallest skyscraper in the United States. Originally was going to be $1.5 billion to build. Now it's up to $3.8 billion. And it's still going to be filled with government agencies because nobody wants to rent it because the demand for office space just isn't there. And really the commercial center of New York shifted from downtown to midtown 60 or 70 years ago. And this is just madness, Peter.
Yeah, well, it's all about symbolism when it comes to the government. I mean, probably should have just left the Trade Centers area as a park, memorial park, and not necessarily resurrected another building.
Or residential towers where there's a demand, established demand for residential towers. Build a memorial. The memorial itself, that museum, $700 million, will cost $60 million a year to operate, which is more than Arlington National Cemetery, which covers so many miles of space. And, it's just absurd. But that's what our government has stuck us with now.
Yeah, well, they stuck us with a lot. We're going to find out just how bad it is. I mean, it's just amazing that the world is still propping us up. I was reading all the headlines yesterday with the dollar hitting these new lows, 5-year low against the pound, 4-year low against the New Zealand dollar, 3-year low against the Swiss franc, 2.5-year low against the euro. And all the articles were how this is a problem for Europe, how this is a problem for New Zealand, how they have to do something to prevent their increasing currencies from minimizing their inflation. And that they have to do something to make sure that they get rising prices. But nobody was worried about the U.S. Nobody thinks it's a problem for America that the dollar is falling, but somehow it's a problem for Europe when the euro is rising. And it's not even about the euro going up. The dollar is going up across the board. It's a weak dollar, and it's not a problem for the countries against which our currency is weakening. It's a problem for America. It reflects the weakening of our economy, the fundamental uncompetitiveness and non-productivity in the United States. And despite all this talk about a recovery, the currency markets don't believe it. That's why the dollar is falling. And can you imagine how much more it would be falling if the rest of the world wasn't doing everything it could to prop it up?
Yeah. And it's good for us because we're going to be able to export our goods more cheaply, right?
No, we don't have to. It's not about exporting our goods. It's about exporting our paper. It's about importing stuff more cheaply. That's what keeps this whole economy afloat, is our ability to print money and exchange it for the stuff that everybody else actually produces.
Yeah,
because our economy is too screwed up to produce it. So we rely on other people to do the hard work, and we just give them a little piece of paper.
Yeah, and they can't seem to get enough of it, can they?
Well, they've already got more than they need. That's why it's going down. But they're gonna throw up on it. They're gonna get sick of having too much. Talk about all these jelly donuts, right? I mean, they're not going to be able to take any more dollars.
It's just remarkable. At some point, their appetite is going to be diminished. Just like the 35th jelly donut. And I think that day is rapidly approaching, certainly in China and Russia, that's for sure. So, Peter.
Well, we're seeing evidence of bubbles bursting in the NASDAQ. Look at some of these high-flying stocks. Look how fast the air is coming out. Look at Twitter. Twitter's barely holding on to $30. It's $30.15. And when the year began, Twitter started at about 74 a share. And it's down to $30. And it's still, who knows how much this, it could fall a lot further than this. Well, and there's a lot of other high flyers. It's not just Twitter. You can look at lots of stocks in the NASDAQ that so far this year are down 40, 50% or more. And they can keep falling.
That's for sure. So Peter, tell us where to find your radio show, your brokerage, your bullion company.
Yeah, well, the radio show is schiffradio.com. I do that 5 days a week, Monday through Friday, 10 a.m. to noon Eastern time. So you can listen live, or you can just go to schiffradio.com anytime and just hear the show. It's a good show. As far as my companies, Euro Pacific Capital is europac.net. People are interested in investing abroad, getting into foreign stocks, which I would strongly recommend before the bottom drops out of the dollar completely. You can talk to my brokers at Euro Pacific Capital. To get precious metals, shiftgold.com is where you would talk to my metals guys. Gold's down. Janet Yellen managed to talk the price of gold down today, but it won't stay down. Below 1,300, I think, on gold's a great buy, and not sure how many more great opportunities to buy it below 1,300 there's going to be, but people should take advantage of it. And, of course, gold and silver, too. I think the prices are going to take off once reality sets in, people appreciate it's this true state of the U.S. economy, and that the Fed is not going to be taking away the punch bowl, that they're going to be spiking it up with more alcohol than ever. The price of gold is really going to take off, and so you want to get in prior to that. And, of course, my new book, if you haven't read The Real Crash, take advantage of the revised and updated edition. In fact, even if you got the original, you might as well get the revised edition because it has better than 100 new pages of information. It's The Real Crash, America's Coming Bankruptcy, How to Save Yourself and Your Country, the revised and updated edition.
All right, Peter, always a pleasure. Thanks so much for being on the show, and we'll talk with you again real soon.
Hey, anytime. Thanks for having me on.
FSN Radio. It's all about what's next. Go to FinancialSurvivalNetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.